Hey, good morning, guys. Josh here, and today I'm going to show you how to trade the MACD crossover. I trade options, I trade SPY every day. It's the only stock that I trade at least like 95% of the time. But you can do this with any stock on any chart. I'm in the Fidelity Trading Plus app. So the first thing you do if you're using this app, you can use any platform. I know a lot of people use Fidelity, a lot of people use Tasty Trade or Thinkorswim. The concept works on any platform. Obviously, the mechanics and the usability is going to be the different depending on what platform you use. But in the Fidelity Trader Plus app, just go to Option Chain, type in SPY. It's going to bring up your options chain. I'm going to be looking at the chart from Friday since that was our last market day, but this will work on any chart, any day, any stock. Uh, so here you can see up at the top, the SPY it actually closed at 745 and change on Friday. It was up about $3. So at the open of the day, it was about let's just call it 745 minus 3. Let's just call it 742, and it was a green day. So I'm going to look at call options at starting at 742 is probably where I would start my day. So right here on the options chart, just go to 742 strike. I'm going to right click on that and go to chart. And it doesn't matter that I'm looking at a call chart here. I'm actually, when you first come into the chain here and pull up the chart, this actually pulls up the SPY chart, which is the SPY pricing for the day. And then you click this little toggle up here. You can go back and forth between the actual option price and the stock price. So this is the chart for SPY, just the chart for the whole. Everything here in black is the whole day, Friday. Everything to the left here in gray, that's pre-market. Everything over here to the right in gray, that's after hours trading. So I'll start by just zooming in here and kind of expanding that chart. And then I'm just going to scoot this over because I'm going to start at the opening bell. Okay. Now, also keep in mind when the stock market opens and the chart starts forming, like these are 1 minute bars that I'm using here. The only bar that you're going to see after the first minute. Okay, so I'm going to call that at basically 9:31 a.m. Eastern time. That'd be the first minute of the market. This is the only bar that you're going to see. Obviously, all those other bars are not there because history grows to the right, and this chart builds as it goes. But what's important here is if you zoom in, since we're at the opening bell, is looking at the MACD here, and you can see right out of the gate after that first minute, the very first thing that we have is the MACD crossover. The red line crosses over the blue line. Uh, that's normally an indication that buyers are in control and the price is going up. Uh, but I don't buy or sell, or I don't buy calls or buy puts based solely on the MACD crossover. There's a couple other factors that you want to consider. Uh, so I would say several conditions that all meet at the same time. They all, like, there's three conditions that you want all of them to be there, not just one out of three, two out of three, or three, but all three need to be there in order for you to get basically a confirmation that you should enter the trade. Okay. And then also the MACD and these candlesticks will also tell you when you should get out of the trade. And sometimes you're going to have to take a stop loss. So you want to be able to trade this to lock in profit, but you also use it, the same strategy, the same method to manage your capital. And you have to have a stop loss built in so that you limit your risk. All right, so the first thing that I look at is here's the MACD crossover. You can see right here in that first minute goes to the second minute. Okay, this is going to be probably 9:32. You've got red over blue. You've got the MACD crossover here, and you have a green bar. Okay, so you had starting out strong. You had starting out strong, and then you've got the crossover and then another green bar. So this would be an indication to me that you can go ahead and enter this trade anywhere on basically once this third bar starts, because you had an opening, you had a crossover, and that crossover you've got upward momentum. So you've got two green bars showing strength, and the crossover, which means once this candlestick closes, and it'll tell you up here in the top left, you've got your OHLC, your open, high, low, and close. Look at this. Look at this first candlestick. SPY opened at 746 and 24 cents. It closed at 746 and 75 cents. So on up a little bit over 50 cents there, 51 cents. Crossed over, continued into another candle, a green candle, continued into strength, opened up at 746 and 73 cents, closed at 747 and 8 cents. So from the open, the first two candles, you've got strong and you've got a crossover. Those things tell me, okay, as soon as this candle opens, the second candle there, and or as soon as this candle starts, this is a good buying party. So let's just say, for the sake of argument, you got in at the open of this candle, you'd get in at 747.09. Okay, and I'm going to track this in a spreadsheet. I'm going to say 747 and 9 cents buy a call option. Okay. And what you're looking for is obviously for this green candle to continue strengthening, going up and up and up. Okay. But that doesn't happen. So in this case, you're in the fourth minute there, your very next candle actually opens near the top of the other one, because right here you can see it opened at 747.09, closed at 747.24, and then went down. In this particular trade, I would actually take a stop loss. My stop loss would be right here at the bottom on the open 747.09. So I would take a losing trade there, but I'm gonna show you, because you're gonna re-enter this trade in just a minute here. So I would take a stop loss on this one, and then your next candle here is green. Comes back up. It has not come back over the high yet, but so I'm not at a new entry, but you can see over here on the MACD, you've got red over blue, and it keeps going up and up and up and up, and you've got a green bar, so that is good strength. You can get in here or here, either one of these candles. I would probably choose to enter here, because I've got green, 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 a small pullback, gives it right back in the next minute, and then kind of goes flat. So I'm probably getting back in right here at about 747.21. That's the opening of that candle. 747.21. And for the sake of argument here, and just show you the example, it's actually more important to get the time, because what I'm going to do is all my trades, I'm going to be looking at the stock chart, but to do my entry, I'll have to flip over to the option chart, and that's where I'm going to make my trade. So I'm looking at the stock, but I'm trading the option. So it's important to just grab the time. In this case, your first one will be 9:32 a.m. and then the second one here, 9:35. So I'm going to mark here 9:32, and this one 9:35. Come back, and from there it kind of goes sideways, and then up, and then sideways, and then up, and then you could get out. You can write. It's up to you if you want to lock in gains here at about 9:39. Oops, 9 in and out at 9:39. Or another rule, since I got in right here, really my stop loss is going to be if it comes down and goes below. So you could take, after this huge green candle, you could take your gain here, here, or here. If you stay in a little bit too long, it dips down, but then goes up a little bit more. You could take, lock in your profit there. Most likely, I'm going to lock in my profit after I see this red candle, because it takes up almost half of that giant green bar. So as soon as I see this, let's just say at the open, that's 747.82. I'm probably going to get out, because not only does this have a green candle, it takes up a big part of this is a red candle here, takes up a big portion and gives back a lot of this green candle. Also down here on the volume, it goes green, 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 and on this red candle up here, the volume goes to red, which means sellers are now in control. So at the open of this, I'm probably getting out on this trade at about 9:40 a.m. Look down here at the bottom, you can see the time. So I'm gonna probably get out of this about 9:40 because that's when that candle forms. So here's a good trade. I'm going to get in at 9:35. I'm going to get out at 9:40. What I'm going to do there is look at the options chart and look at the full day here. And here, okay, here I'm going to get in. What did I say? 9:30, 9:35. Okay, 9:35 is this one right here. And you can see it opens at $7.01. Okay, and that's the price. And then I'm going to get out here. I'll just put sell over here at 9:40. And it looks like, well, that's that doji up there. Opens at about 751, 7.51. So you make roughly 50 cents just on that contract. So if you let's say you purchase well, one contract is basically going to equal $50. So multiply that out times however many contracts you buy, and I'll just do the math here for you. Since this is 50 cents, you're going to buy one contract. That equals 100 shares of a stock. I'll just say contracts represents that many shares. So your profit will be equal to this minus this. That's 50 cents. So your profit is, that's just difference. And then profit equals the 50-cent difference times 100 shares times the number of contracts that you bought on that one trade, you make $50. So if you bought 10 contracts, that's $500. Buy 100 contracts, that's $5,000. Most sites will limit you to about 200 contracts, or you have to do multiples, or you have to call in and get permission to do more than that. But if you're at the max, that would actually be in one day. That would be just that one trade. That would be a $10,000 trade. Okay, I don't know too many people that are trading 200 contracts at a time, but I would say it's very, very common to trade 5, 10, 25, 50, or 100 contracts, just depending on how much capital you have to work with. But that one trade there is going to net you $50. And then I'm out at 9:40. Now go back to the chart. Always, once you're out of the trade, I completely get rid of and disregard the options chart and go back to the stock. And that rode up. We were out at 9:40. Okay, which was right about there. It's also at the peak. And then your next crossover here is this. This is red going back down, crossing over blue, which means your stock price is crossing over and it's all the way down. And again, I don't trade based on just that crossover, but I'm going to do a couple things here. The crossover happens right there. So you want to enter the trade when all these conditions are met. One, it has to have the crossover. Two, you want to open when a candle basically goes below this bar right here. So you can get in and you've got it opens here and it climbs up. This is the first red candle after that crossover. So you can actually get in here because this candle closes on a red. I would actually probably get in about right here, and that is 9:51 a.m. So here I'm going to buy a put at 9:51 a.m. Come back here, 9:51 a.m. And what's the price of the stock right now? Uh, 9:51 a.m. opened at 746.95. So I'll just say, you know what? I'm going to probably buy puts at 746. I'm going to round down to the nearest dollar since it's just below 747. I will say, all right, where's my strike? 746. The price is 746.95. I'm going to be buying puts. I look at this. What do I put the strike over here? 746. These were 747, by the way. Now I'm going to be looking at puts at 746. In order to do that, I'm going to have to switch gears. Okay, I'm going to have to actually close this chart and go to 746 puts. Since I already know what the stock price is and the direction it's going and the time I want to buy it, I have to come over to here. Now I'm going to go to the option chart on the put. Zoom in and blow this up. And again, just to remind myself, looking at the time, 9:51 a.m. I'm going to buy right here, and I'm actually going to take a stop loss because if I buy right here and it drops on that very first candle, I'm out. So I'm going to take a stop loss on this one. And I'll just, for the sake of argument, I'll just say stop loss. And this first one was a stop loss as well. You're probably only should be only losing a few cents on that. All right, so I'm out of that one. I close this. I go back to the stock. Again, the stock is about 746. I was on 740. I think I was on 742 before. But now that the price is at 746, I'm going to go to the 746 chart. And I was at 9:51. Let me zoom in a little bit more. Basically, I was out at 9:52 or 9:53. I was only there for a minute and took a stop loss. 9:51. Okay, so now we're still at a blue over red. We're on a downward trend. And the price actually pops back up here. But since this is my entry right here, I'm going to get in again anytime a candle closes below this one because that's my indicator. So we took a stop loss there. The next candle that closes like right below that is right here. So you can get in at 9:56. And oh, that's a screenshot. What is that paint? I want to say that. Sorry, wrong one. 9:56. And the price is going to keep dropping and dropping and dropping and dropping and dropping and all the way to this crossover over here when the price of spot, the crossover happens here at 743.73 at 10:27 a.m. So I'm going to get into the trade at 9:56. I'm going to get out of the trade at 10:27, and I'm going to be looking at the put charts on 7:46. So come back here, go to the chart. Scroll, I'm going to zoom in here. Here is 746 puts. I'm going to get in at 9:56. At a price, let's just say on the open of $3.02. Okay. And getting out at 10:27 when the crossover happens on the stock. Actually, I had a peak right here, started to drop. If I'm watching the option chart, I'm probably actually going to get out about right here because here I'm going up and up and up. And as soon as this red bar takes over more of that green, right before that crossover happens on the stock, I'm probably going to get out here if it opens there at $4. So you made 98 cents on that one. So you just do the math here and you make $98 for every contract on that one. And again, I usually do 100 contracts at a time. If you want to multiply this out, I've already made almost $15,000. Here's my profit for the day, almost 15 grand. Okay. Almost 15 grand for the day. Minus, I had a stop loss here it's probably going to be about 10. Honestly, this is probably about it. I usually take about a 20 cent, 10 to 20 cent stop loss. After that, I don't let it go anymore. So if you're going to use a rule of 20 cents, let's just say, and I don't know what the price was here, but let's just say it's the same price, 701, and I get out probably like 6.81. Okay. And if this was, I don't know what the one was before that, but I'm just going to use kind of the same math here. If this was 302, I'm going to use like 2.81. Okay. And then multiply this out. I'm going to lose 2,000 there. I'm going to lose 2,000 there. It doesn't matter. If you just up all the contracts, you size them all the same. And then you equal all of your trades for the day. So if you're doing one contract, you're up $100, even with those two stop losses. Here's your first stop loss there. That's your second stop loss on that one. So you lost $20 and then you made 50. Then you lost $21, then you made $98. But that's just on one contract. If you can do 10 contracts, that's $1,000 for the day. If you can do 50, that's $5,300. And you only got 4 trades, and you're done. This one was out just at like 10. I think it was a few minutes before. It was like 10:25 a.m. And you're done for the day. But I usually don't. I usually keep going. So I'm going to close this. I'm going to go back to the 746 chart on SPY. It really doesn't matter what chart you use. I'm going to say go here and go to chart. I had my next crossover. The cool thing about this is you're actually going to get out of one trade and go immediately into the other. This is one of my textbook ideal perfect setups. This kind of crossover right here, I like it for a lot of reasons. Okay, number one, it's a crossover, so you got red over blue. That's good. What I really like about this is, where I'm probably going to go like 200 contracts, is because the MACD is at the very, very bottom. So like here, MACD is at the top. Here's kind of your middle line, and you can see MACD, the volume bar is like below and above. So this is kind of at the high end of MACD, and that's where I like to buy puts, right? When I see this crossover here, usually a very strong indication that the price is going down, and that's exactly what happens. Let me show you. I mean, when I kind of see this in my head, try to do a screenshot here. It's not working for me. I'm not sure why. Get out of there. But this is usually a very strong put indicator, and you can see the price on SPY goes from basically $748 and crashes and comes all the way down to $743. So about $4.25. And then now MACD is here at the very, very bottom and has another crossover. Here I'm going to go really, really strong when it's at the bottom. So I'm going to get in. Let me zoom in here. There's the crossover. There's the crossover right there. Okay, and I've got a green candle. I'm probably getting in on this green candle since it opens above the high of that one. So I'm going to get in right here at 10:28 a.m. 10:28 a.m. I'm going to do call options. And look at how beautiful this is. It just goes up and up and up and up and up. And I'm probably getting out right here for a couple of reasons. One, I have my first red candle there. I might even get out actually right here. I'm going to get out at the open on this one. I'm going to get out at 10:39 a.m. 10:39 a.m. Oops. 10:39. What am I doing? 10:39. What the fuck is going on? 10:39 a.m. All right. So you're in there, you're out there. Now I'm going to go to the call chart, which is at set. Let me look at the price. Let me look at the chart that I'd be on. So the price of the stock is, when I get in on that second one, price is at 745 and change. So I'm going to look at when I'm actually buying this option, I'm actually going to be buying the 745 call. So let me go to the 745 call, go to the chart, go to the option, and I'm going to be buying that at 10:28 a.m. and getting out at 10:39 a.m. So 10:28, blow this up. 10:28. Gotta zoom in there to make sure I'm on the right candle. 10:28 right there. Just say on the open. Open is $3.59. Okay. $3.59. And then I'm going to sell at 10:39 right there on the open because I've got a red candle right there. This perfectly mimics the SPY stock price, even though I'm looking at the option. That I had a red candle there on the stock chart as well. This is the option. So as soon as I see that red one, take some profit there. Probably at the open here. The open is 397. 3.97. And again, if all your option sizing is the same, say equal however many contracts that is, your profit there is 38 cents, and that's going to be $1,900. And you can just say equals like let's just take that whole column. I'm up $7,200 for the day, and that's just on 50 contracts. Again, if I don't know how much money you have in your account, but if you're just doing one contract, that's $145 profit, even with basically you're 3 for 5 for the day. Your accuracy right now is only 60%. You're winning 3 trades. You're losing 2 trades because I'm taking a stop loss if it drops at 20 cents. That's just my typical max stop loss. So there's and that can happen, and I do that because I think it's enough of a miss. 20 cents tells me I probably didn't get in at the best time, or there was what's called a liquidity grab when you've got a MACD crossover. It looks like it's going up, and then what's called a liquidity grab. The stock price goes the other way. It just means it doesn't continue the momentum. So anyway, if it drops, 5, 10, 15 cents, obviously I'm not happy about it because I didn't get in at the rock bottom. But you also just kind of have to just like throw that out of your head because it's delusional and it's a fantasy. You're never gonna just have every trade where it's like I always get in at the absolute bottom and I always get out at the absolute top. I buy low and I sell high, and I do that on every single trade. Okay, that's just a delusional fantasy, and you just have to get it out of your head. And I'm even going to go as far as to say that anyone that shows you a chart and just says, look, our algorithm or our bot or whatever told us to buy here and sell here and buy here and sell, and they get out because I see this kind of BS all the time. You zoom out something like this. Any monkey, can look at a chart. Let me zoom out here and say, okay, so we had a trading bot, and our trading bot told us to buy puts right here and then take our profit and then get back in right here. So sell and then buy calls right here and get out right here and then buy here and then sell here and then buy puts here and then close their position they're always perfect. They're always batting 1,000. They never take a loss, and they're always getting in at the absolute high and the absolute high. I say, bullshit, you're a liar, and I hope you die and burn in hell because you're stealing people's money and you're lying to them about how they should manage their trades, and they're lying about their product in order to sell a price, and it makes me so angry. I really hope that they die in a car wreck on the way home. Um, anyway, that's just me venting. So I'm here to tell you guys the truth, how I actually take the trades. I'm never going to just look at a chart and tell you, I'm a genius, I'm the best trader in the whole world. I actually bought right here and sold right here. And I bought puts right here and then got out of the position. Any monkey can look at this chart and tell you that. I'm never going to tell you that. I'm going to tell you the method that I use using a MACD crossover and for the entry and exit signals that I find. So, and hopefully you can take that as the truth, because on my very first trade of the day, like, why would I show you a stop loss on the very first trade of the day if I was trying to sell you a product? So, but I had two losses, only three wins. I'm only batting 60% today. But you're up $145 for the day for every one contract that you buy. And again, if you've got enough money in your account that you can do 10 contracts, always size them the same, you're up $1,400 for the day. If you can do 25 contracts, that's $3,600 for the day. If you can do 50 contracts, $7,200 for the day. I think you can live on that. That's a pretty good day. If you can do 100, 14 grand and some change, very nice. And if you can do the max, if you have enough capital, not many people don't, most people don't, that's $29,000 for one day. So that is how I trade the MACD crossover. I'll keep going though. I'll give you some more examples. Last one here, I did a call option. I'm out at 10:39 a.m. So let me go back to the stock chart. I think it was at 7:45 calls. Let me go back in there. And oh, Lord bless me. I had to sneeze there. Sorry about, all right, I'll blow up this chart here. And 10:39, I'm out right there. Okay. Now, price keeps going up, but I've got some red bars. Let me zoom in on this. So I'm going to keep going and keep trading for the day. Okay. So now starts to I've got red volume bars here, which means sellers are starting to take over. And you can see sort of this up sort of consolidation. I mean, you've got some highs here and some low here, and it kind of trades back in this range. I don't know if you actually have a crossover, but here, this is a no trade zone for me, because here, in my opinion, I'm too close. You're too close to the middle. So you want to get, either when you want to buy puts when that MACD is way up here, and you want to buy calls when that MACD is way out here. Here it's kind of starting to kind of go sideways, and it's kind of close to the middle. So that's a no trade zone for me. So I'm probably just going to leave this open. And the next trade I'm even going to look at is probably right here, because again, the MACD is all the way near the top. Also looking to the left, always a good place to look when I'm here. Here's MACD on very high, and then you've got a crossover right here. But if you look all the way left, look at this is where it was at the high of the day, but it crashed over here, then came back all the way up. But since the MACD is near the high right here, and I've got a crossover, it's right here, I'm going to start looking at puts. So let me zoom in here. There's my crossover. Okay. Here's my signal. So I'm going to enter a trade when I see the next candle that closes below this price. So here I've got an open of 747.56. So I'm not going to trade this one because that's not a red candle and it's not below this one. Doesn't qualify, doesn't qualify, doesn't qualify, doesn't qualify. Here, it's pretty close. Let me look. There's my crossover. I'm looking for the open here is 747.56. It closes at 7 on this red candle. It closes at 747.68. That's still higher. Not getting in there. Green, 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 green. 747.58. Nope. And then right here, 747.5 actually opens. I'm sorry. Yeah, opens at 747.5 and closes low. I might be I'm taking a stop loss at this one because on this very next candle, it's green and it's gonna close above this one. So I've got a red candle, so I'm gonna take a very short stop loss here. I'm in at 11:49. I'm out at 11:50. So I'm gonna come here, 11:49, out at 11:50. And I would be looking at the price here opens at 746. So I would be looking at 747 puts. Since it's opened here at 747.50, and I'm looking at puts, I'm going to be rounding down, looking at the next dollar amount down. So 747 puts, 747 puts. Look at the charts. Go to 11:39. And I'll just zoom in to get that price. 1139, and I'm out on the next one, 1140. This one's here since I actually get in right here, and this one is sort of a doji on the option, and then it drops. That's the stock chart. So now I'm going to go here to look at the put options chart and look at 1149. I'm sorry, 1139. Sorry. So here I would get in at 1139. I would actually get in, let's say, at the open at 269. Let's see. This equal that out at 1150, especially since this next candle drops. 1149. Let me make sure I'm doing the right times. Yeah, 1149, 1150. Okay, so 1149 at the open. Yeah, I got in at $2.74. The low here, let me make sure so my open there is 274. My stop loss is actually 20 cents below this, so it's my stop loss would be $2.54. The low is $2.68, so I'm not out. 265. Here's another low. 263. It's only dropped about 10 cents. So I'm actually not taking a stop loss on this one. I got in at 274. I'm not going to take a stop loss until it hits 254. And it doesn't look that any of my lows ever go to 254. Never hits, never hits, never hits, never hits. And the reason I say this is because now I can ride this up because the momentum, I've got red over blue. I'm in at 1149. Then I've got this huge green candle. Okay. And it closes at 296. So here's an interesting one where I said I was actually going to be in and out, in 1 minute, out in the next minute, but it actually doesn't hit my stop loss of 20 cents below. And I've got a nice profit here of almost 30 cents. So I'm actually going to just lock in that. I'm actually going to make money on this because I did not take a stop loss because it didn't hit my 20-cent mark. So now there's another one, which is a 27-cent gain again on one contract, 27 cents. If I do 10 contracts for the day, you made $1,700 for the day. If you can do 25 contracts, you're at 4,300. If you can do 50 contracts, 8,600 bucks. And this is just how it goes. So, and I'm going to keep trading this way all day. And this chart and this method works. I use it on SPY, but if you're going to trade options, basically I'm going to stay with either index stocks, so either SPY or QQQ. If you want to do a leverage stock like on NASDAQ, you can do TQQQ. Or if you want to buy some of the what used to be called the FANG stocks, FAANG, it was Facebook, Apple, Amazon, Netflix, Google. Facebook is now Meta, so they used to be called the FANG stocks. Now I guess you could call them the MANG stocks. But some other hot ones today, I think, are Palantir, which is PLTR. NVIDIA is certainly a hot one. NVDA and other blue chip large companies. You can trade like Tesla or Microsoft. Obviously, you're going to have a lot of activity. Or just go look at the news, and you can look for the like according to volume. What are the top 10 stocks for the day according to volume? And just trade any of those. But like I said, 95% of my trades are on SPY. So I'll do a live stream next week. I try to do those once or twice a week. This was just a demo because I had some free time and I wanted to show it to you guys. So hopefully you found this helpful and happy trading. So that's all I got for today. Thanks for joining. I'll talk to you guys soon.